In the near term, the impact is going to be slightly negative, right? But when you think about the carve-outs, first of all, we import about 4.2 trillion a year as a country. Roughly 40% of those imports were already exempt from this new round of tariffs. You mentioned the 232 tariffs, right? Steel, aluminum, autos, auto parts, things like that. But I think it's important to understand that those 232 tariffs, Section 232 tariffs, were put on by Trump in his last administration. And if you remember, Biden ran on we're going to cancel the tariffs. In the end, what happens is when someone like China, a state actor, can act uneconomically or non-economically, and they can flood your market with steel or aluminum or synthetic graphite or anything like that. And why it's important is they can act for a longer period of time to put your businesses out of business. So they can take capacity utilization down enough to where they can literally turn our steel industry off, turn our aluminum industry off. So those tariffs are necessary, and those will live, and they will live into the future, and they may not be high enough. We must maintain domestic production of certain things from a national security perspective, and that's why those stand where they stand. For autos, it's just you see China building plants in Mexico and Canada, so basically to avoid the tariffs on their cars. And so our negotiations with Mexico and Canada are primarily on fentanyl, secondarily on Chinese transshipments, and we'll end up getting this right.
Kyle, even if you believe that the tariffs are ultimately necessary for the American economy, how much more pain do investors have to bear? Because you do still see the S&P 500 after yesterday's rally still down more than 7% this year. You saw the bond market whipsawing wildly just this week. How much more pain is there as this transition and this negotiation proceeds? I
think so. We need to separate a few things that you said. The bond market had a fit, in this sell-off, and it was largely due to it wasn't a basis trade. It's the fixed floating swaps, and I know that gets in a world that a lot of people don't want to talk about, but it was very simply a regulatory trade that bond traders had on, expecting banks' abilities to buy treasuries to increase. And then the tariff mayhem showed up, and that had to unwind. I think that had a lot to do with the crazy move in the 10-year. So I think things are settling down. But, as far as stocks are concerned, you've heard the president, you've heard the Treasury Secretary say, we have to make some difficult choices. And we must reset our trade relationships for the rest of the world. We also must narrow our fiscal deficit in the United States. And both of those things might be slightly recessionary. And if that's true, we might have to go through a brief recession in order to rebuild our foundation. And you say, how much longer can investors hold? Look, the market's not up and to the right, every year of every decade. And I think that this is a necessary resetting so that we can grow again in the future and grow more thoughtfully.
Kyle, as an avowed free market capitalist, I care mostly about myself, right? So the 2017 Tax Cuts and Jobs Act, President Trump punched me in the gut with a massive tax raise, right? Because he takes out all of a sudden this state and local tax deduction cap that's been in place, or it puts in a cap after we had a state and local tax deduction for 104 years. Mm-hmm. If I can get a discount now on my taxes because of DOGE cuts or because of revenue on tariffs, I'll be happy. And you have said you think that DOGE is going to cut $600 billion out of government costs and that we could raise $600 billion in revenue. Is that going to offset the tax increase that Trump handed me in 2017 somehow?
No, and look, let me begin by saying, Matt, I know you're out in things for yourself, and that's, I guess, what you care about. The good news is you and I and Wall Street are not setting trade policy for the world, because if all we did was open ourselves to unrestricted free trade, we'd all be speaking Chinese tomorrow. We need to be thinking about national security in the long run. On the tax side, there are going to be some tax breaks, but they are not going to be for the top of the scale. It's going to be focused more in the middle class. And as far as state and local deduction caps. I mean, it's interesting to see the migration in the United States. You live in a place that sounds like it has state and local taxes. One could say
we
that
all pay property taxes, right? Don't you in Texas?
Yeah, we do. We pay property tax. But when you think about high tax, high cost jurisdictions that some might say are mismanaged, you see the migration in the U.S. moving from the Northeast and the West Coast to the South, to Florida, Tennessee, Texas, South Carolina. And that's where major businesses and people are moving. And so I think that tax arbitrage or movement is going to continue for the next, call it 10 years to come. And I think you're seeing people vote with their feet.
And I do want to defend Matt a little bit. I know you care about more than just yourself, but people care about their pockets.
In terms of the wealth of nations, right? Adam Smith, that's how capitalism works. Right. Every man for himself. That's how it's supposed to work.
Well, Kyle, with that in mind, I want to talk to you about you and your future, because Bloomberg reported in January that the Trump administration was considering you for a post at either the Treasury Department or the Defense Department. And I'm really curious, here we sit in April, are you joining the administration?
I mean, I'm going to go no comment there. It's not worth talking about unless there's actually a deal on the table, and there certainly is no deal on the table. My biggest regret in life is that I've never formally served our country, and if there's a place where I can serve it and it can work out in my life as well, then I'm always open. I've got open ears.
Well, definitely come back if and when you do have a deal. But I also have another question, Kyle, for you about you and your portfolio. When you look at this market, how do you play this? What are the trades that you would put on right now?
I think when the market's down 20, it's year to date, which was, I guess, a couple of days ago. I think it's an overreaction. But when I think about the coming GDP prints, you're going to see a recessionary impulse. You're going to see a slight inflationary uptick on a couple of goods that ended up in the tariff melee. But I believe the slight recession impulse that we're going to see over the next 6 months will actually bring the general price level down. I don't think you're going to see a big inflationary move or stagflationary move. So I think 6 months from now, the market's going to be in a much better place. And that's with the caveat of if China doesn't attack Taiwan, if things in Iran don't get much worse, and if things in Russia, Ukraine don't get much worse, I think things are going to look better in the next 6 months. If China invades Taiwan, I think all bets are off.